Hi, welcome to the Market Alert for Tuesday, the 25th of July 2023. So, banks bid, bonds and Bitcoin battered as stagflation scare source. So, we've moved the agenda further. Now, stagflation, US stocks edged higher on what was a choppy session ahead of risk events and mixed PMIs. Yes, tomorrow night we've got the FOMC, haven't we? That's what the market's waiting for. Wednesday the 26th of July, rates to rise to 5.5 is the forecast. We'll just have to wait and see if that is the case. News today, 9 a.m. we've got German business info, and then we've got consumer confidence from the US at 3 p.m. as well. So let's have a look at the markets for yesterday. Very quiet at the moment as we head into the summer holes, normal seasonal situation, but very quiet yesterday. So let's kick off with the Dow as we normally do, work our way through to the metals. So the Dow yesterday managing to move higher once more, taking out the 35,373 from Friday. Look at the monthly charts as we have been doing. We're heading for 36,952. Get the FOMC out of the way tomorrow night, blast the market to the upside. Once we've made the all-time high in the Dow, then we're going to get some spectacular moves, I suspect, as we'll get a correction in the market, which we normally do following an all-time high. We had this in the DAX and also the FTSE 100 in the last few months, and that was exactly what happened thereafter. So this is going to continue to move higher, no doubts about that. Yesterday, they blasted the market higher as soon as it opened at 230. No surprise there. And the market still above the DP overnight and needs to get back above the close, but the high is only a stone's throw away. In the German DAX, different picture. This has already made its all-time high, as we've seen before. At the moment, we've got a bit of a sideways ascending triangle type of pattern there. Market needs to break to the upside to continue to move higher, get dragged along with the Dow. Yesterday, you see a bit of buying there. We had the flash news out yesterday, and this played havoc with the market. As you can see, in the first part of the session, the market was just sideways every 5 minutes, up and down, and eventually, once the news was out of the way, the market was able to then move to the upside and then drifted back down to more or less where it started at lunchtime. And then just after lunch with the US, you can see coming off that DP and then trading back above the high. Overnight, the market is still very, very quiet, starting to move to the upside now to fill the gap that we see from the overnight. But you can see that we're stuck in a range and just starting to get back above the DP there and the 200 MA and the close, which is no surprise for a Tuesday morning. All of the weekend news is out of the way on Monday, so the market's free then to move back to the upside. There's the news, all the flash news yesterday. Then we moved up a bit, then we came back, and then we went back 89% before we came back overnight, and we gapped lower. So obviously some weakness around for the market to do this, but no big deal, no great shakes. We're heading back to the high today. We always seem to do at the moment because they want the Dow and the S&P back at those all-time highs. And speaking of the S&P, again, you can see from the monthly charts, same as the Dow, we're through the 78, heading towards the 89, and the all-time high there, of course, 4817. In the daily chart, stuck in a bit of a sideways range, and we need to take out the high of Thursday of last week. I do believe this is. No, it might be Wednesday, actually. Where are we? Tuesday, Monday, Friday, Thursday, Wednesday at 4578. But we are stuck in that sideways range at the moment. But yesterday, managing to move higher on the flash news from the US, sending the market to the upside. In the FTSE 100, stuck at 7687, where we saw this happen back in June, 16th of June to be precise. Market had its shakeout and has since moved back up, but we need to take this level out. 687 needs to go. 30-minute chart for yesterday, where we sold off in the pre-market, then we came back up in the cash following the markets, and then up in the afternoon with the Dow. US dollar still managing to move back to the upside, weakening the metals, but a bit of weakness overnight, waiting for the US news tomorrow night. An increase in rates is good for the dollar, to move it higher, and as you can see, they're already anticipating this and pricing it into the market. So let's have a look at the metals reaction to this yesterday. Starting off with silver, the market bouncing off the 38% retracement. As I said yesterday, they'd hammer it lower. That's exactly what they did. They did that on the news at 1:30. No, it wasn't 1:30 actually. It was the LBMA fix, London fix, that sent the market down. They bought back in, and then it dropped back down 89% and has managed to move up overnight. And that seems to be the pattern for silver. Move up overnight until the corrupt LBMA come in and fix the price at lunchtime, which they shake to the downside. But a bit of a bounce there overnight. Same for gold. Also bouncing off 78% retracement, which is from there back to there. And again, you can see the same thing with that, but not to such a great extent. Prices sideways overnight, and then early part of the overnight, and then in Asia, the market moving back to the upside there. So I expect these to be hammered back down during today at 1 p.m. And then finally, the gold-silver ratio. Silver obviously moving a bit faster overnight percentage-wise than gold, which you can see there. Okay, that's it for this one. Expect another quiet day, unless there's a black swan event or something coming out of the blue, because the market will be waiting for those FOMC numbers tomorrow night, and also Powell's testimony at 7:30 p.m. BST. Okay, that's it. As ever, thanks for watching. See you in the next one.